Lately, I have been talking about how we are being lied to, how we are being played, how they are manipulating this market to shake us out. And I really do believe that in this video, I am going to uncover every single thing that you need to know right now regarding how they are lying to us and how they are manipulating us to make sure that the biggest players here enrich themselves. Let's start off with this post here from Hunter Horst. This is the CEO of Bitwise, by the way. He's quoting the CEO of SoFi. Now, if you guys don't know, this is pretty much like a new bank. I mean, it's not exactly completely new, but it's a bank that's been getting a lot of attention recently, especially considering the fact that they've been integrating, stable coins. They've been going all in on crypto, essentially. They're not like a completely new bank, but they're definitely like a newer one compared to like some of the top tier ones. Now, what we're basically seeing here from Hunter is the idea that the banks are now joining the team crypto. And that's in 2026, of course. 2026 is the year where we are starting to see a big shift here. Now, like I said, with SoFi, they launched back in like 2011. They're not like a completely new bank, but they are newish compared to some of these long-standing banks that have been around for decades and decades and decades. But if we go over here to, of course, the CEO of SoFi, we have, "Hi, join me in buying, selling, and holding crypto with SoFi. You'll get $25 when you use this link to open an account and make a purchase of $50 or more. And you'll get to access cryptocurrencies on a federally regulated platform with the safeguards of a bank." Now, again, I think that it's great to see this. I think that it's awesome. But the big issue here that I'm seeing is the fact that why now? Why, after we just witnessed one of the largest sell-offs in a very long time? We're talking about a 50+% drawdown on Bitcoin. Oh yeah, that's right. The big banks and the big players, they don't buy when things are going up or when things are up. They shake the market first, and then they start to jump in. And that's exactly what just happened. Now, do I believe that Anthony and SoFi had a role to play here? Probably not. But I do believe that these big players were planning for this. And I think that Binance and some other larger exchanges in this space also had a role to play. Now, if we go over here, we go to mainstream media. February 5th, Bitcoin is crashing so hard that miners are unplugging their equipment. NBC, crypto crash accelerates as investors flee risky assets. Cryptocurrency lost more than $1.2 trillion worth of value from its high water mark on October 6th. CNBC, Bitcoin crash, crypto plunge wipes out all the gains made since Donald Trump's election in 2024. So mainstream media is pushing all of the fear headlines and all this nonsense while we're starting to see banks buying up the crypto dip. This is at the same exact time that this is what Ethereum looks like on Binance. I mean, guys, although this is on the 15-second time period on Ethereum, when you start to see price action like this, I mean, it's kind of crazy, but this is what you would typically see when investing into like a meme coin on like Dex Screener or something. This is not something that you would see on an exchange the size of Binance. I find this very interesting. But you might be saying, well, Nick, that's not really manipulation. Okay, sure. But what about this? Again, here we have Ethereum more in depth with massive wicks to the up and down side. This is from Leonidas NFT. A massive crime was just committed on Binance. Over the course of 15 minutes, the price of Ethereum was pumped and dumped by over $100 repeatedly. $13 billion of value was created and destroyed every minute. The manipulation successfully liquidated a large Ethereum long position. And yes, that's exactly what this goes to show you. This shows you that they are attacking leverage positions. Do you guys remember what I just recently said in a video? I said that considering that crypto is fully unregulated, these exchanges can easily see your positions visibly. It's all transparent, and they can attack your positions using market makers, using bots. That's exactly what this is. If you believe in crypto long-term, Why don't you lock in on an IRA account from iTrust Capital? They offer one of the best platforms out there for anyone that is planning their retirement around crypto. And the best part about this is, yes, there's tax advantages built within this platform. And also the best part about this is that they offer everything you need for tax reporting. If you sign up today and deposit $1,000, you get a free $100 bonus utilizing my link down in the description below, as well as in the comments below. So what are you guys waiting for? Go check them out. You won't regret it. And with that being said, let's dive on in back to the video. This is why when we look at this, again, we're not talking about the right side. We're talking about the left side. Those massive wicks up and down. It's all to target leverage positions. We have over here. I'm confused though. On bad days, CZ Binance says, I don't run Binance anymore. But then on doing good days, we have we. This is from Crypto Pepper P. FUD doesn't hurt the target. My followers increase. FUD hurts the market, i.e. everyone. Binance do not sell in any meaningful amounts. I and Binance. My selling equals I swipe my card and $5 worth of BNB gets converted and sent to the coffee shop. I don't run Binance anymore, but based on what I know, Binance only converts a portion of their revenue to pay for expenses. They are a large net hoarder. Binance also has a global regulator now who can review every trade on every account. Don't be misinformed. Use your energy on positive improvements for yourself. But then we helped in this recovery effort a tiny bit. I didn't tweet when it first happened to not spread FUD, a human error of 134 million versus $1,340. All airdrop features should have a maximum value check. I'm not even sure if all our portfolio projects have 100% coverage on this. But wait, I thought that he left Binance. He doesn't run Binance anymore. Why is he talking as if he still runs Binance? But then we also go back to October 12th. Do you guys remember this post? Breaking. Binance just started pumping millions into Bitcoin and Ethereum to liquidate shorts. Yesterday dumping, today pumping, pure manipulation. Again, this is when Bitcoin was back to $114,000. Here we have on the right side, Binance depositing in a massive way. This is hundreds of Ethereum and also well over 100 plus Bitcoin. This is insane. I bring this back up because we have over here, Binance aggressively accumulating Bitcoin to liquidate short positions. Manipulation? And this is right after they invested with the Seifu funds. I mean, this is insane to me. Like, again, anyone that's saying, oh, no, these exchanges, they're not committing manipulation at all. This is a fully unregulated market where crime is essentially legal for a lot of these exchanges. I mean, they have regulators that tell them exactly what they can and can't do. Obviously, they know a lot more than, what I know about what they can do. But we know that so far, a lot of these players have been pardoned and any crime that they committed has essentially been overlooked. With these exchanges, the way that they run, they have bot accounts, they have, bots that are constantly trading against you, market makers that are manipulating the price action to liquidate positions. This is how they make a ton of money. But even when we think about this, right, we go back to what the big players have been telling us. Oh, this is just a flush of liquidations and, this and that. Like even over here, we have from Cryptos R Us. This is what a real flush looks like. This is from Charles Schwab. One of the largest financial institutions in the world said that Bitcoin sell-off was driven by a full liquidation event. They described a market where momentum broke, funding rates turned deeply negative, implied volatility spiked above 90, and long positions were forced out. From their perspective, that kind of washout often marks a local bottom, which is why they began positioning for a rebound on behalf of institutional clients. Oh, wow, look, Charles Schwab is now buying Bitcoin. After they said how this move was fed on itself, retail borrow. Oh, it's retail. It's retail borrowing using Bitcoin-backed loans that were margin called and forced to sell, while institutional clients with large Bitcoin holdings were able to meet margin requirements without selling. Oh, wow, what a surprise. So retail gets screwed while institutional clients are able to just, stomach the pain. Their takeaway was simple. This wasn't fundamentals breaking. It was leverage getting flushed, and the recovery that followed looked healthy. So wait, let me get this right. So Binance was definitely a large player in all of this. They were a huge exchange that were selling billions. We looked at it on chain. And retail got screwed while institutional players were able to meet margin requirements without selling at all. And now they're starting to add more to their positions. Definitely not coordinated at all, right? Check this out.
Moved on to other shiny objects, AI, gold, silver, all sorts of different ways to try to catch momentum. And that inventory buying just has not come back from retail speculation. And so you've seen a plummet in price and just perpetual selling of these assets. Specifically over the last 24 hours, what we saw is just momentum, liquidations, and a total blowout in the price of Bitcoin. From our view, we saw implied volatility reach over 90 yesterday. We saw funding rates go deeply negative, and we saw almost all the long positions get liquidated. So we think, at least in terms of a local bottom, we've touched it. And for us, that's a great time to sell puts or get a little bit longer on behalf of our institutional clients. And that's exactly what we did. I would say also the last pressure is, we're one of the largest Bitcoin-backed lenders in the world, and there's a lot of these Bitcoin-backed loans. And what happens is when the price of Bitcoin goes down, clients need to send in more Bitcoin. For us, institutional clients, our clients have tens of thousands of Bitcoin. They can meet the margin calls, but there's another retail layer to these loans that often do get liquidated. So you can get this cascading set of loan liquidations, which requires more Bitcoin selling. And there was probably a degree of that for some lenders yesterday. But I would say all in all, it's been a healthy recovery today.
So again, for their clients, this was completely different, right? What a joke. That's why when we go back to that Arthur Hayes post, you guys remember when I made that post, I was talking about how this was all manipulation? We have here Arthur Hayes on why Bitcoin suddenly dropped. It's likely that Bitcoin was sold off because banks were hedging bets tied to BlackRock's IBIT ETF. He cited Morgan Stanley structured note linked to IBIT, basically a bank-made bet on Bitcoin's price. When Bitcoin moves, banks have to quickly buy or sell to protect themselves, which can amplify big price swings. Hayes says that he's now tracking these products to see where the next big moves could come from. Yeah. Well, we just heard from Schwab themselves saying that this was because retail got liquidated. But what caused the initial swing low? Well, Binance. Binance was liquidating leverage positions, and it caused a massive, cascade in liquidity, which also ended up leading to a much larger cascade where market makers potentially got wiped out too. This is why I said, i.e., the big players are shaking retail out. Most of this space is back to believing the 4-year cycle is still in play and that we have months of down-only price action. Considering all the factors with the last 12 months, I would argue that this cycle is completely different. If we believe the 4-year cycle is still in play, then 2025 historically should have been the year of alt season plus crypto's largest expansion to date. I don't think I need to tell you that it wasn't. If the bullish phase of the cycle isn't playing by the rules, then why should the bearish phase of the cycle? In my opinion, many will be surprised by what can happen in a very short amount of time, especially in a thin liquid sub $3 trillion market. And yeah, listen, if we could wipe out $1.2 trillion from October to now, you're talking in 4 months, we could easily add $2.4 trillion to the market cap in the same amount of time. But the main thing that we're looking at here is that we're being lied to the entire time. We literally are being lied to by mainstream media, from this admin about the pro-crypto stance. And during this entire time, we have Binance manipulating us and these larger exchanges manipulating us at the same time that the big banks are literally telling us, oh, hey, yeah, this is just retail getting wiped out while our institutional clients, they're fine. They were able to meet margin requirements without selling at all. Nobody's questioning how it's always beneficial for the institutional players, but it's always negative for the retail sector. Give me a break. This is exactly why retail gets screwed out every single time, and they get shaken out of these positions and these strong positions that they get into in these very, very early on markets. This is also why a lot of people and a lot of retail, they've just missed out on significant wealth creation over the years because of moves like what we recently just witnessed in crypto. Do not get shaken out. Do not get played by these big institutional players. Now is the best time to lock in my opinion. So with that being said, I hope you guys enjoyed this video.